Welcome back. This is Shirley Davis, and I'm back to do another video. I want to welcome back all my subscribers and welcome to my new viewers. This is a channel where we talk about my top stocks, but we also tend to talk about crypto from time to time. Tonight's video is going to be about 3 stocks to watch, and then I'm going to throw in a random stock just because. But 3 stocks that report this week: Zoom, the video application Zoom. Conferencing reports on 11/22. So that's tomorrow, Monday. And John Deere reports on 11/24. So that's Wednesday. John Deere, the tractors, and Dollar Tree reports on Tuesday. So those are the 3 stocks I want to cover tonight. Real quickly, I'm going to go through them. And again, Earnings Whisper is the platform which is announces a couple of tips about the stock, but also the earnings date. So, for example, Zoom reports this week, and John Deere and American Eagle, but it's the earnings which depends whether or not the company, did they beat the revenue estimated by the Wall Street analysts, or did they come up short? So it's really important that these companies beat the revenue estimate and earnings per share for the quarter. If they do, then the stock tends to keep on rallying. If they fail to meet estimates, then the Wall Street analysts can downgrade the stock. And it may not go down the very next day, but within several weeks or 2 weeks, the stocks will go down. Okay, so let's take a look at the Zoom. Zoom has had a tough year. Zoom over the last 5 days is down 1.45%. And over the last year, Zoom is down 30%. Now, it's still a good company. We don't know if Zoom will come back. It has a 52-week low of $245. It has a high of $486 now. Now, what happened to Zoom was, at the time Zoom came out, they were in high demand because everyone was working from home, and that technology was very new at the time when they came onto the public market. So if we look back about a year and a half ago, before the pandemic, the stock roughly traded at $73. And then once we got shut in, boom, the stock shot up, over, 300 something percent, 200 something percent. And that was due to them being the first to market sort of the video conferencing application. Now, since then, there's been several competitors to come out with that type of technology. One of them you may be familiar with, called Microsoft. Microsoft says they have a Teams application, communicate with Teams members, and for best for business, that's easy remote solutions and cloud phone, make calls, host meetings, instant message, and video conferencing. So pretty much any big tech company that's anybody has come up with conferencing software that is almost comparable to Zoom. Microsoft Teams has, Facebook has. There's just so many other competitors that have now come in and saturated the market over the last 2 years. Even though Microsoft is not centric, the Microsoft Teams application is not centric, is not the only application that provides conferencing, but it is an application that has found a way to be installed on many machines. So Microsoft Teams has a comparable product to Zoom, and Zoom has also had security problems over the last year or two. They've since then patched it up. And then Zoom can also go out and, with, the size of their company, they can go out and acquire other companies. So there still can be a story to Zoom. We just have to wait to see where the bottom is. So right now, the 52-week low is $245. And we'll have to see coming out of this earnings call, did they get new customers? Did they extend contracts? what are their measures? Did they beat revenue guidance for the quarter? So all those things are going to take effect during the earnings call this week. So that's Zoom Communications. Again, they've been down the last 5 days, over 1%, and pretty much year to date, they opened this year back in January at 344, and now they are as low as 30%. So we're looking to see if this is the bottom for Zoom, and then see if they can beat expectation of the Wall Street analysts and give good guidance of where they'll be in the next coming quarters. So that is Zoom Video Communications. Again, they will report this week. Next stock ticker we'll talk about tonight is John Deere, the John Deere company. John Deere has had an interesting year. The stock opened back in January at $294 and it's just up $293. Many people are familiar with John Deere. They're generally agriculture equipment, but they do have a technology side to them. I actually was working with a company that was writing API software for John Deere. So if you visit John Deere, don't think of them just as a, farming equipment. They have enough market cap to do a lot of other sectors because what's happening with John Deere and a lot of heavy equipment operators, they're becoming autonomous. That means they're having self-driving technology, or where the tractor or the equipment is driven by software. So John Deere over the last year has been up 29%. They have a 52-week low of $250, and they have a 52-week high of $400. Now, this is a pretty good growth rate for the year, 29%. I think anybody would take that as an excellent, steady growth. The only issue John Deere faced this year says here John Deere shares rise as worker strike ends. So apparently this year they've had a lot of strike work issues, or workers from the UAW were striking, and they finally come to a deal. So this stock being up only 29% this year probably could have been higher had they not had that strike in place. But the strike is behind them, and now they can probably plan for some other things. Okay, so let's look at the last 5 days of John Deere. The stock has been down the last 5 days at $362. They were as low as $346. So they've been down the last 5 days. Now let's see what they report during the earnings call and see if they beat revenue estimate and earnings estimate. Again, you can always check out CNN Money. CNN Money will be able to give you an opportunity to see the forecast of the stock that's already been given out by Wall Street analysts. And we do the Money CNN forecast. Forecast.html symbol equals DE for John Deere. And if we look at what 19 analysts believe, offering a 12-month forecast, that John Deere stock can get to $480. And then it has a median forecast of $410. So that's John Deere. And 12 analysts believe it's a buy. 2 believe it's an outperform. 7 also believe in hold, and only one underperform and 1 sell. So that's a good measure of John Deere. Again, John Deere right now is trading at $346 per share. And like I said, John Deere does have API technology. That means software. John Deere, okay. So this is John Deere products and services. As you can see, this is John Deere site, agriculture, lawn equipment, landscaping, engines and drivetrain, government and sales. Let's see. Yeah, also, look at that, software acquisitions. See what John Deere has done as far as software acquisitions. Okay, that's empty. Okay. John Deere acquires golf software on link. This is back in 2019. Systems and software requirements, Timber, Navi, John Deere, software updates. So John Deere looks like they've been busy. Remote diagnostic program construction technology, John Deere. So pretty much any of these big behemoth companies can become technology companies too. And as you can see here, back in 2019, they acquired golf software. So don't think of some of these companies always as, you know, the main product they show you, because oftentimes in the background, these companies are smart. Not only are they doing research and development for the current market, but they're doing research for the future market. That's John Deere. Again, their stock is trading right about $346 per share. Trying to find some other stuff. Let's see. Do some searching around the website. Parts and services, not here. Finance. John Deere API documentation. So here it is, developer software documentation for John Deere. So again, some of these companies, like I said, you may see them as an equipment company today, and as a company, you know, primarily for other agriculture businesses to work with. But it says here, develop with Deere. John Deere's APIs enable your AG and construction industry software to securely access robust data from John Deere machines and mobile applications and more. So that is John Deere. Again, it says start developing today. And so again, with technology coming into place, just like Tesla and autonomous cars, people want to have autonomous equipment as well. And John Deere is in the front of it, acquiring other software companies, and also in the background, they are developing technology. So this is the, looks like the offline SDK. This is called the Software Development Kit. And here's the agriculture API capabilities, transfer data, agronomics data, machine monitoring, logistics data, and JD machine data. Now, one of the things about the data, I know one software I was working on, pretty much when that machine or heavy equipment is plowing the land or digging the ground or doing, there's being data collected, and they can actually tell where there's low fertilization rates, poor soil, several different things can be told by the data being read by the scanner that's being fed back into the machine and then being remotely, you know, cast back to the data server. So again, don't think of John Deere as just an equipment operating company. They have a huge market cap, and they're able to invest into all kind of software and all kind of additional equipment to beat out their competitors. So that is John Deere. Again, the stock reports this week on Wednesday, 11/24. And let's see, forecast. Earnings per share is $3.87 earnings per share. And again, that will report what $10.5 billion in sales. And also they do pay a dividend of 1.21%. So that is John Deere. They also have this worker strike has come to an end. And they've been in business, looks like it's been founded since 1837. So that is John Deere Company that will report on Wednesday. And my last stock, Dollar Tree. Now, I'm sure people are very familiar with Dollar Tree. No, everybody doesn't shop at Dollar Tree, but it is a marketplace out there. Over the last 5 days, the stock has roughly been up 9.28%. Year to date, the stock is up slightly 26%. So back in January, the stock opened at $106. And today the stock is trading at $134. So this is Dollar Tree. It is at its 52-week high, so it's probably not a good time to buy it, but you can wait for a pullback. And again, if you want to kind of look at the forecast, you can only use CNN Money. BLTR is the ticker for Dollar Tree. The forecast says the stock can go as high as 175, but they may hit a pullback. This is John Deere. This is Dollar Tree. And like I said, the 21 analysts out of the 12-month forecast believe the stock can get as high as 175. Now they will report this week, so we'll see if they meet or exceed Wall Street analysts. But this stock is really hot. If you look at this, just a week ago, the stock opened at 123 and now it's 134. That is red hot. So it says Dollar Tree, formerly known as a Dollar, is a American multi-price point chain of discount variety stores headquartered in Chesapeake, Virginia. It is a Fortune 500 company and operates 15,115 stores throughout the 48 contiguous United States and Canada. And look at some headlines. Here's the playbook Mantle Ridge may use to boost profitability at Dollar Tree. And this is really important about Dollar Tree. As inflation rises, there may be a segment of the consumer base that will shift to Dollar Tree rather than go to Walmart. There will be some customers that will shift to go to Dollar Tree for some items. So Dollar Tree has seen a ticker rise of 9.28% over the last week. And over the last month, they've seen a 30% rise. So that is huge. So that is Dollar Tree. Let's read this article. Dollar Tree shakeup was long overdue. Let's see if the company did something huge, if they closed stores. Okay, an activist investor thinks shareholders should get more bang for their buck at Dollar Tree. That article about the shakeup. So what is an activist investor? An activist investor is someone that holds about 15% stake in a company, and they make some recommendations to the board. And they basically start making some noise about what they like about the company, what they don't like, and what type of direction they want the company to go. So it says Dollar Tree shakeup was long overdue. So maybe that activist investor made some requests and the board held and listened. And maybe there are some changes in the pipeline. But I do like, the 30% gain in the last month on Dollar Tree. So that is pretty cool. So Dollar Tree is up 30% on the day, on the month. And they've been up, like I said, 9% over last week. And again, their forecast says the stock could go as 175 per share. So that is Dollar Tree. So those are the three stocks I wanted to cover tonight that report at Zoom. That's Dollar Tree and John Deere. Now, the last stock I wanted to talk about as a surprise is Lucid. Lucid Group. Again, Lucid Motors. They did report earnings about a week ago now. And here's some articles. Missed out on Lucid and Rivian, two EV stocks. Can you buy them now? That's by Motley Fool. And is Lucid trying to be the normal EV company? Now, right now, Lucid is a very high-end luxury car. Each car is customized to each owner that orders, and the vehicles run anywhere from 100,000 to 122,000. Now they are saying the Lucid Air will cost at least 77,000 with some government tax breaks. But right now, the general price of the Lucid Air or some of the other vehicles are way over 100,000. Also, Lucid Group is also backed by one of the Saudi Arabia groups. So they do have a lot of capital to work with. And they have one other positive thing you can say about Lucid is they have made customer deliveries. The other part they haven't mentioned where they're talking about, have you missed out on the 2 EV stocks Rivian? The Rivian truck does not exist. There is not an automotive plant. So Rivian basically has 1 or 2 concept trucks. They don't have an actual plant in cars. So Lucid Air is already delivering. Now, one thing I've learned from the playbook of Tesla is what happens after you deliver your first, let's say 15,000 vehicles or 100,000 vehicles, you have to keep your customers happy. So after about a year of Lucid being out, people can make a determination. Was the quality of the car good or was the quality of the car bad? What they liked, what they didn't like. And as time goes on, they should get better ratings. So Lucid also has hired some top engineers from Apple as well. There is rumor that Lucid could be working with Apple in the future, but for now, we do know Lucid. Lucid Motors adds executives from Tesla, Apple, and Intel. And this is back in March of 23rd, back in March. So this is the good thing. When you create a company, one of the things you want to do is make sure, number one, you're fully capitalized. That means you have enough money. In their case, they're backed by the Saudi Arabia fund. Number two, do you have the right leadership in place? Do you have the right people that been there, done it before? So this Lucid Motor article adds executives from Tesla, experienced people from Tesla, Apple, and Intel ahead of production. So this was written back in March. And like I said, they did meet the timeline frame of last week or last 2 weeks delivering cars. This is why the stock took a dramatic jump over the last month, because they started delivering actual cars. The stock literally jumped from $26 per share to $55 per share, just because they started delivering orders. And also Wall Street analysts like what they heard during the earnings call. So again, Lucid Company is making all the right moves. Also, it says Pete Najarian buys Lucid call options. Now, what is call options? Call options are, they're estimates of how high the stock price can go. So let's say you bought the stock at $26 per share. Call options are, hey, I believe the next strike price is, usually it's like $5 or $10. The strike price is, $45 by, next Friday or something. So that's what a call option is. You can also have a put option, which is reverse, where you could say, hey, I believe by, 2 weeks from now, the stock will fall, X amount, $5 amount. So what people do, and you'll see a lot of this on Robinhood, they do options calls is because it's cheaper, because you're only estimating the gain on a stock. So if you're estimating a gain on a stock of $10, and you have to do like, if you do options on a stock, and let's just say you did an option call and you said you believe by next Friday, a weekly option call, and said it's going to go to $60, then you have to do 100 of those contracts usually. So that's what people like to do. People generally will do, if they don't want to buy the stock, they'll buy the option call, which says, hey, I'm just counting on the call, the company's stock to go up. And Pete Nigerian, he's a featured guy on CNBC all the time. And it's a little bit safer for some people to do option calls, but it does require knowledge. It says, he noticed unusual call buying activity in Lucid at the opening on Friday. He noticed unusual call buying activity in Lucid on opening at Friday. There was a spike in the volume at a 48 strike price and call option expiring November 26. So that means they believe that the price would go to 48. This was early Friday last week. So again, there's people, what they do is they just buy into the call option because it's easier to manage that way for them. So you don't have to just wait for the time to pass for the stock to just reach it, but the call option will allow you to capture the stock if it reaches the expected call option. So again, like he said, there was a strike price of $48 expiring November 26th. Now, I don't know if this was when the stock was $44 or not. Let's take a look. Friday, what did the stock open now? Thursday. Okay, well, the stock opened at Friday morning at $47, and they did a call option for a week to hit 48. That's pretty interesting. But again, there's people, what they do is they do the calls options, and then that way they can just get the spread basically from the current price to the expected price. They capture that profit in between, and you could do as many contracts as you want, but in general, you start with 100 contracts. So let's just say, for example, you did 100 contracts on a stock, and it moves from $48 to 50. That's 100 times 2, so that's roughly $200 that you could gain very quickly on a call option. So that's where people do call options. Again, I don't do call options because it's really reserved for people that more experienced. But today, you have more and more young people. They love to use the technology, the Robinhood platform, and do call options. But it's very risky. So anyway, this was just a quick video about what was going on in the marketplace. Lucid Motors or Lucid Group is one of the hottest companies out this week. Again, the stock is up over the last month 128%. So if you thinking about getting into Lucid Motor Group, check them out. You might want to buy a few shares now and wait for a pullback. Also reporting this week, we have Zoom, we have John Deere, and Dollar Tree. So I want to thank you for watching. Thank you for listening. Please like, share, and don't forget to get your free share of stock if you're signing up with my Robinhood link. Also, I have the Webull link if you prefer Webull. Thank you and have a good night.